Alex, the first question is going to go to you. Tell us what problem you're solving in trading.
Sure. So currently in the cryptocurrency trading space, there's many different exchanges. In equities, for instance, all the exchanges that are there work together where if you send an order, it gets rerouted to the best exchange at the best price. Crypto, you don't have that. So each exchange is sort of its own island of liquidity, its own clearing firm, its own market data provider. And it creates a lot of decentralized points of execution. And that's true not only for opening an account, but also for trading using an algorithm or using an API. So what Xtrade is doing is creating a unified API, allowing for an institution or a hedge fund or an algo trader to actually connect to just one API that's based on a commonly used fixed protocol, which is the standard for the last 30 years in finance, and be able to easily access technologically market data and execution in a co-located setting, in a cage, if you will, that's low latency, high frequency trading capable. And so that's our primary solution. We're also working on clearing solutions, working on front ends, and many other projects that we're going to announce in the next couple of months. So it's great to be here.
Nariman, what are you working on at tZERO, and what do you see as the problem you're solving?
So at
the tech side, from the technical side.
Yeah, so at tZERO, what we're working on, well, the main thing we're working on is issuing our security token after we raised about $130 million. We're about to issue the token. But the big project we're working on right now is the platform to allow secondary trading of that token. So you'll see that coming in the next few months. We're very excited about it. As soon as the regulatory rules will allow trading of our token, we plan to have it trading on our platform. So it's very exciting for us.
Friday, you were part of the process that tZERO employed to have its capital raised. Can you tell us a little bit about what Amerex did? And my understanding is you guys are the first private placement agent here in a security token raise.
Yes, we were, but without saying that, I think we're probably one of the first, if not the first. And I think we played an important role with this security token offering. From the beginning, we saw a need for compliance in this new environment, the capital raising that was happening as far as utility tokens were concerned. I've been an investor in the space myself for quite a while, and I almost got involved in a few schemes, and I saw the need that there has to be somebody, some type of either a regulator or somebody who operates under some sort of regulation to come into the space and help protect the investors that are losing their money. And that's when we started a conversation with tZERO, and we actually embraced what they were doing, and we loved the security token infrastructure. We then took that on, obviously, and we acted as the placement agent, and we played an important role in onboarding all the investors, not just from the U.S. but internationally. More than somewhat around half the investors were from the U.S., half from about 50 plus jurisdictions outside the U.S. But when we saw the demand that was coming from outside the U.S., we didn't just accept the investors from these different jurisdictions. We went out and we wanted to understand how these different countries saw, whether it was a security, whether it wasn't a security, what their take was on tokens in general, and what exemptions were not available to be able to be somewhat compliant with these local laws. So we've done that. We've done that in 50 plus jurisdictions outside the U.S. We now understand that, and we can actually apply that to any security token offering from here on. And we are in all 50 states, so we can accept investors from all those states. But the KYC, the AML, the verification, accreditation that we've done for, I would say, 1,200, 1,300 plus investors was quite a bit. It was a lot of work for us.
And Ralph, tell us a little bit about where you see tZERO in its evolution, where it started, where it's going. And I know recently tZERO announced a joint venture with Fox Digital Markets. Talk about that as well.
Sure. I just want to touch on one thing. We did a security token offering, and we did a 506C part of our Reg D offering. We did a concurrent Reg D and Reg S. And what Gio's firm, Amorex, was able to do for us is to ensure that enhanced accreditation on the Reg D element of that. And that's an important element because that's not self-certification of accredited investors. And so that gave the protection really to tZERO in our security token offering, that we had a broker dealer, a private placement agent verifying.
And you did that in order to do a general solicitation?
Absolutely, under that 506C exemption. So really, where tZERO began, where we're at and where we're going, really just to, I guess, briefly just give a little background. tZERO is a majority-owned subsidiary of Overstock.com. We were formed in late 2014. Part of the ecosystem that we put together was first an acquisition of Pro Securities, an SEC-registered FINRA member broker-dealer approved as an alternative trading system. And that was part of the foundation of our ecosystem to match the buy and sell orders of digital assets. That was used in the first public issuance of a blockchain security. That was Overstock preferred shares that were issued in digital form. And we really undertook what became an 18-month educational roadshow with both FINRA and SEC staff. First to get an S3 registration statement approved, and then secondly with FINRA staff to really get the ecosystem that we put together, which included introducing broker, a clearing broker, a transfer agent, and our ATS. We were able to do that. We effectuated the first public issuance of that digital asset and digital security on December 15th of 2016. And then in 2017, we saw the advent of the ICO marketplace. The first half of 2017 saw upwards of $2 billion raised, largely through the use of utility tokens. The goal of the utility token, or one of the goals, was to fall outside of federal security laws so that there would be no prohibition on secondary trading. That changed on July 25th of 2017 when the SEC issued their DAO report. They analyzed the DAO token. They really, three things came out in that report that was put our industry really on notice. The first was on a facts and circumstances basis that federal securities laws applied, they were applicable, and you needed to be in compliance. The second part was that the issuance of any of these tokens must be in compliance with federal security laws, so whether it be full registration, crowdfunding, Reg A+, Reg D, Reg S. And then the secondary trading of any of these tokens must be in compliance. And that could only have been done on one of two ways. One is on a national securities exchange, which in 2017 there was none. Today there is none, but that leads us into our joint venture with Box Digital Markets and tZERO. TokenX is the name of that exchange, and we are literally submitting a rulebook very soon to the SEC for the first regulated security exchange for security tokens. And so that's the evolution of to where we were at. We did a security token offering. We did a Reg D, Reg S concurrent offering. Our mandate really was to build that first regulated security trading platform. Now we have our ATS, we've traded digital assets on it, and now we'll layer the exchange on top.
Alex, what do you see? I got to do something with mine.
This one's not working.
Alex, what do you see as a trend in 2019 and beyond? And where do you think Wall Street will start noticing the crypto assets and security tokens that are going to be coming about?
Well, I think the key theme in 2019 is going to be custody. So when you have, like I mentioned earlier, multiple small liquidity islands where you have to basically hope they don't take your money when it's registered in Malta or Gibraltar or Belize or something like that. It's hard for an institutional entity to put their money and also their clients' money. And so in order to really effectuate large amounts of liquidity in the cryptocurrency or digital asset or any kind of space, you need to have a qualified custodian. And so I think the trend is going to be things like you see with BACT, which is the ICE product from the New York Stock Exchange, where broker-dealers can open accounts at the exchange that's centralized, that clears there, and it's safe because it's under the ICE umbrella, and they can trade on a high-frequency basis and then do end-of-day settlement with end-of-day file instead of just reporting trades to the blockchain. And so the qualified custodianship will allow institutions to do that, trade easily and quickly, to remove those fiat to crypto frictions. And that's going to enable much more liquidity, much more transparency, and hopefully a better market for all of us in 2019.
Nariman, in terms of technology, what do you think is going to be unique for security tokens, and what will be the impact, you think, on the industry? I mean, clearly you think that trading security tokens is going to be cheaper and far more efficient than what we see today.
Absolutely. I mean, you can see from the ICO market that how exponentially it was growing before the SEC kind of put a stop to it. There's a lot of people that are interested in investing their money in these high-tech companies. I think now that the SEC has provided some clarity on it, there's going to be a need for security tokens, like the kind that tZERO is offering. I know there's some other companies doing that. And I think that it's going to completely revolutionize the financial markets. It's going to give people a much easier way to raise money when they do private offerings. And from the investor standpoint, the reason we're building the exchange and we're building a platform to allow secondary trading is that that's how you can build more and more interest in this. When the investor knows that they can invest in a company at the startup stage and at a later date, they'll have an easy way to trade it and sell out and cash in on that, I think that's going to completely revolutionize the market. I mean, this is an industry that's kind of very, very slow to change. I think once the regulators start to see, and they are starting to see with our conversations with them, the power that these security tokens offer, the stuff that you can take out of the hands of having these long contracts, and you can actually code that information into the smart contract. I think it just makes, it's all upside. It's all upside. It's such a cleaner way to do financial markets, and cheap, efficient, and safe. That's the big part.
So talk a little bit about, from a programming side, where you see compliance modules fitting in.
Yeah, compliant, I think the only challenge with security tokens is regulatory compliance. It's really easy to make a token. I mean, the ICO market showed that anyone who was literate and could write a white paper could issue a token and sometimes raise hundreds of millions of dollars. The hard part is making a token that's compliant. So for us, what that means is that we need to know information about every single investor, and we need to know information about the laws that apply to those investors. So, for example, if there's an investor that's based in the US and is accredited, we have to record that information because that enables them to either buy or sell under certain rules, under certain SEC rules. And that's what we're building. So we have a registry of every single investor. Of course, the data is anonymized, so no one's going to be able to look at the chain and see who you are. But we know their domicile, we know their tax information, we know their accreditation status. And with that, you can create rules that allow for trading that's compliant with the SEC. And that's why I think the SEC and FINRA is going to come around to this, because they'll see the power that has. Right now, they have to trust that the broker-dealers are complying with those rules. We'll actually have, a mutable ledger that shows that we have been complying with those rules, and that the contract itself won't allow a trade that's not compliant with SEC regulations.
Gio, where do you see the industry developing in the next couple of years? I mean, obviously you're a leader in this technology, in the process for issuing security tokens. Why have you gotten into it, and where do you see the industry growing?
As I mentioned, the reason I got into it is I love the technology. I think blockchain, distributed ledger technology itself, for the next however many years will be a trend. Like whether it's blockchain or some other sort of distributed ledger technology. I got into it as an investor because I love the technology, and I saw that there was something real there. It reminded me of the internet days back then, which I was still too young to even, be involved in at that time. But I also saw the problems that everybody was facing with all the schemes and everybody jumping into the space just to steal money and run, or commit really, bank robbery. It's really called a hack nowadays. It doesn't matter. So, and I wanted to bring the firm into the space because there was no way that was going to continue to go on for a very long time. And I wanted to be one of the first in the space because I've always been an entrepreneur and creative in the things that we do. And eventually, I think that the whole system is going to move more towards security tokens, at least in the near future, with a lot of the uncertainty. I think there's, we can see already that the regulators are going after a lot of different projects that have raised capital and they weren't compliant, and whether some of them are just, for the sake of singing wrong statements or something else, but they're really trying to make sure that everybody who's raising capital today isn't doing it illegally or is really doing it with good intentions, and they have the ability to actually build the company that they want to be, that they're saying that they're doing. So I see this space moving more and more towards the security tokens. There is a little bit of uncertainty, obviously, and a fear out there, especially from the investors that we speak to, because there's no place for those security tokens that where they can trade today. But we're hoping that's going to happen very soon with the tZERO box partnership, and potentially anybody else who's going to come into the space and be able to allow security tokens to be able to trade compliantly in the U.S. and outside the U.S. As this is really a global product. It's not just a U.S. product. So in the meantime, I think eventually there will be some type of utility token that has to get defined by somebody to say that this is an asset that needs to be out there. And whether that is a tradable asset or not, I'm not sure. But in the meantime, I think the focus is going to go more towards security tokens. We get a lot of companies that come to us wanting to raise capital, but there's a lot of confusion, whether their token is a security or a utility. I tell them I'm not here to determine whether your token is a security or a utility. And we do turn away a ton of projects. We only really select the security token projects. That's what we want to focus on, and that's what our investors want at this.
Give us your thoughts on where you see the token industry moving, as well as what have been your interactions with regulators? Do you find that they're receptive to the idea of security tokens?
So the first part of that question, I see the industry moving to just, first thing, we need more clarity around certain attributes, custody and control, how broker-dealers can hold these assets, how can they proliferate and be traded into a larger audience. The regulators overall, and Steve, because we've been fighting that fight for 3 years now, are really just sitting down with regulators and educating them. And educating them first, going back to early 2016, we've had FINRA staff walk in and really with two clear mandates, right? The first is help educate us on blockchain, and please give us a prize for your efforts as you go along. And we took that to heart, and we did that, certainly. I think that we saw in the beginning of 2016 to really mid-2016 the escalation of their knowledge base, and certainly from when we issued our token, when we issued our preferred share, I should say, in digital form in December of 2016, FINRA staff as well as the SEC were fully apprised. We would have joint meetings with FINRA and SEC staff. The questions and the level of detail and the nuances. And I think that what's important to understand is, yes, the regulatory infrastructure of having a broker-dealer approved as an alternative trading system is the first step. The second step is working with the regulators and the integration of technology, looking at the process flows, how the technology coupled with the ecosystem of registrars, how it works to get regulator adoption, if you will, that all of the regulatory checkboxes are checked off, if you will.
Alex, going back to you here. As you're working at X-Trade and trying to figure out a custody solution, where do you think your solution will play in with the institutional and Wall Street players?
Well, twofold. One is the technological access to multiple liquidity centers using one unified API they already use. The second, as I mentioned, is custody. So we're working with traditional prime brokers in the FX space that clear trillions of dollars, that they're able to clear fiat and now digital securities, digital currencies, and you have exchanges joining that network rather. So what happens is that you don't have to have an account in multiple exchanges, you just have an account at the prime broker. So your funds are not at risk. And Xtrade will actually do the real-time risk management and provide real-time drop copies between the exchange execution and the prime broker, so they can do the risk management knowing how much money you have. That'll allow for sort of a frictionless way to access cryptocurrency liquidity without having to open those multiple accounts and subject your funds to counterparty risk. So those are some of the solutions that we're bringing, which is essentially technology and safety of funds.
So, Alex, just following up on that, do you see in the future a battle between traditional exchanges and crypto exchanges? And do you have a dog in that fight?
Well, traditional exchanges have been around for quite a bit of time. They've had many, many tens of years, decades to innovate and iterate all their processes, all their procedures, their customer delivery, their safety, their execution capability. Crypto exchanges have launched, primarily in the past couple of years, meteorically so, obviously creating hundreds of millions of dollars of revenue, but at the same time, they're not built by financial technologists. They're built by cryptocurrency or blockchain developers. So the systems that you see in cryptocurrency exchanges are frequently not on the same par that you would see in the New York Stock Exchange or NASDAQ, which is why you see failures, customer outages, drops in all sorts of issues, not being able to get your funds out, which are unacceptable things. I worked at a broker-dealer. Somebody called me and asked me for 50 grand out of their account, and I just didn't pick up the phone, I'd be in jail. And in crypto, you don't have that. You just do whatever they want. It's kind of the Wild West. So I kind of see that the crypto and the traditional exchanges merging on the technology side. Whether one buys the other is obviously up for debate. But I think we'll see more of the traditional finance elements coming into cryptocurrency exchanges in the next few years in order to make them more legitimate, more transparent, more regulated, and that in turn will allow for more institutional liquidity and also drive spreads narrower and allow for more retail trading to occur, which is the ultimate sort of growth factor in this space.
What about the evolution of financial products? Do you think Bitcoin futures move the marketplace? Do you think having an SEC regulated ETF will move it further?
Well, it's interesting. When they had the Bitcoin futures come out initially at the end of 2017 by CBOE, they were settled in cash, which literally created a shadow market of trading between the futures and the underlying instrument. So I think having an ETF that's physically settled is going to be a better solution. You're seeing that with several products. I think ETF approval is going to be a little bit slower than we think because regulators tend to move slowly because the financial system is as complex as it is, as stable as it is, it's still subject to throwing a monkey wrench into it if you don't really do the right thing. So it's the law of unintended consequences. And so one example is if you have a cryptocurrency or Bitcoin ETF, Bitcoin itself can be manipulated because the markets are so illiquid. So you can manipulate the underlying versus the ETF and cause the price to close higher. And so the regulators look at not just, hey, we want to have an ETF so we can trade, which is obviously great for everybody, but also what happens when something goes wrong. Is there a market surveillance? Is there enough liquidity? Is there enough transparency? Is somebody regulating? If something goes wrong, does somebody answer for it? And I think those are the elements that need to be in place before you have a lot of these instruments come into play in a large scale.
And in terms of what you just described with exchanges, is Xtrade building so that anyone can access any exchange, or is there a certain limitation to the technology at all?
Well, we're kind of exchange agnostic, asset agnostic. We're building execution pathways for digital assets, for FX, for equities, for derivatives. And so for us, it's really a matter of providing access to the asset. We don't really limit our clients in the scope of where they can trade. Our goal is to make it as easy, as streamlined as possible, but at the same time, we try to deal with more reputable jurisdictions, more liquid assets, things that we think our customers would want to trade in the first place. And we keep an eye out for normalizing the issues that are in the market data space. Like we have connections to exchanges where somebody will send us a cancellation before they send us an execution, which is difficult to figure out the position you have at that time. So our job is to kind of face those challenges head on and develop tools to normalize the fees, normalize the execution capability for our clients so that they can seamlessly access these digital markets and other markets as well.
Nariman, what challenges are you facing and what are you trying to overcome? Without giving away trade secrets, obviously.
What challenges? Well, really, I think the only challenge that there is in this space is the regulators, how to build it in a way that's regulatory compliant. I feel like with this space, there's so many entrenched institutions that when you look at it from a blockchain perspective of just thinking about how should this market operate, you realize that there's so many intermediary steps in the financial markets that are completely unnecessary with blockchain. The problem is that the regulators feel comfortable with all of those intermediaries. So you have to find a way to take a technology that's decades ahead of the system and kind of dumb it down to a point where it can go through all the intermediary steps that the regulators feel comfortable with. So I think that's the big challenge. The technology is so much more efficient than the current market that it's too efficient for the regulators to be comfortable with. So
I think that's a really good point for those of us who are advising technology companies on how to navigate this regulatory environment. Recognizing that technology can do something doesn't necessarily mean that it's legal, nor that regulators are going to be comfortable with it. And the analogy that I like to give is that my car can go 120 miles per hour according to the speedometer, but in New York, should there ever be enough open space to do that, it's not going to be. So, with that, I know we're taking a little extra time away from the meditation. If everyone will take a deep breath and give the panelists a warm round of applause for the thoughts. Very grateful. Thank you.